Yeah, welcome to day 3 of week 4. And I hope the last episode was quite interesting for you. And moving on to the next thing today is going to move you a little bit closer. By now, with what you have learned, you'll be able to execute a trade and understand what you are doing while you are doing it. So, right now, by the time we finish this week, and you have to get your hands on time with me, we'll be able to have a live session so that I help you in putting these things into practicals. Because the reason why you have a one-on-one mentorship with me is not just to go through these recorded sessions and like you could have just been watching YouTube. It is also the place of me holding your hands. And before I get into today's message or today's lesson, which is understanding stop loss and take profit orders, before we get into that, I was having a conversation with someone today and we got talking about what will I do differently if I'm going to start learning Forex from zero, like I don't know. What I would do is to be able to get a mentor as soon as possible. The route I took was to go watch a lot of YouTube. Bless me. Was to go watch a lot of YouTube in the attempt to getting to understand forex trading. It made my journey quite longer because that way I don't know what I'm supposed to be reading at a particular time. While all these free resources are interesting, uh, aligning them on what to read next could be a difficulty. So if I'm going to start again, I will get a mentorship as soon as possible, and that is what you are above your peers in going through this uh, mentorship session with me. In fact, I said I'll stop calling this a beginner class because the beginners that I've seen, they don't go into showing you most of the things that we have been showing ourselves here, especially when we started on week 3. It will be an advanced level thing, but I found a way to simplify it and give it to you early because the journey is long. So, with all that being said, without any further ado, let's get back to today's lesson. So, why is understanding stop loss and take profit orders? Why is it important? Trading without stop loss, which many of us do when we were starting out of negligence and stupidity. Uh, Trading without stop loss, you can trade without TP is still reasonable, but let us focus on what we have on the notes before I digress too far. Trading without a stop loss or take profit is like driving without brakes or a destination. These two others help manage your risk by protecting your capital and lock in profits before the market turns against you. This evening, when I was going through what happened in my chart on my trading in the past week, I saw one of the trades that I profited from had reversed against me. If I didn't take my profit, it will have gone back to zero, and then I'll be hoping that something else turns up for me. But these tools, this stop loss and take profit, is what is like your savior when it comes to being in a position in the market, right? So let's take the stop loss first. What is a stop loss? You hear trader call it SL, right? A stop loss is an automatic order that closes a trade when price moves against you by a certain amount. Let me read what we have in this note, then I will break it down. The purpose is to limit your losses and protect your account. And the way it works is that if you enter a buy trade, for example, and price drops to your stop loss, the trade automatically closes to prevent further loss. In the last session, remember what I talked about? I talked about position sizing, right? So one of the tools to make this position sizing work for you in the place of risk management is by putting a stop loss at a peep. So let's say, for example, I'm already entering a market with my $1,000 account. My risk ratio reward, I'm having a 1 to 2. That's my expectation, at least from the market. So I would decide how much I'm losing in that particular position when I'm getting into the market. And on that basis, I already have a percentage in mind. So let's say I'm risking 1% of my $1,000. That's $10, right? So when I see a setup that I want to take the opportunity in from, what I'm going to do right there is to set my stop loss to exactly where it is just going to take that $10 away from me if the market doesn't give me what I want. As a rule of thumb for new beginners, this is how it should be done. But the more your skill improve, your stop loss might not always fall into a 1% category. It could be lesser, it could be a little bit more, but that way you are certain of how much you are going to let go from your account if this trade goes against you. Basic. So let's take some example. You have been using Euro USD. So you buy Euro USD at this price, 1.100, or add the other zero as well, right? You click a buy button, or you are buying at that particular moment. When you buy, what are you expecting in that pair? You're expecting that it's going to go up, right? Awesome. So you set a stop loss, an SL, at 1.0950. This price, is it above or below your entry? It is below. When you are buying, your stop loss is below. When you are selling, your stop loss is above, right? So if price drops to this particular price where you have set your stop loss, the trade closes immediately, preventing a bigger loss. In fact, there is a saying that the stop loss that you refuse to put, or the losses that you refuse to take early, most of the time might fall into even more losses. That's it. So where do you now place the stop loss? Below recent support. Remember, our strategy is to make decisions around support levels, because decisions that you make around support or resistance levels, whether for a buy or a sell, whatever the case may be, are the ones that gives you the best opportunity to leverage your account on the basis of risk to reward ratio. So below recent support, that's where you buy, and above resistance, that's where you sell. So using some indicators, you can adjust your stop loss based on market volatility. I don't use this indicator, but let me explain how I do mine. If we can see the chart here, so let's say I was selling around this area, right? Let's say I was about to sell around this area. Why would I sell around that area? Because the market had been closing around that place, right? So it's a point of reference for me. And I was about to sell, which later sold. Let's say I got the opportunity to sell. If I put my stop loss, if I put my entry here, my stop loss will be above this area. Now, using some kind of strategy, my stop loss should go to the previous high. So anytime the previous high is way too much, far, like the pips there, if stop loss should hit it, it's going to be more than 1% of my account. I might not put my stop loss there. I might not even enter that trade at all, because I am a businessman. I am looking for where to get the most opportunities, right? So two things. You can put your stop loss by calculating pips below, or put your stop loss to the last high if you are selling, or to the last low if you are buying. So let's say if I was buying from here, I was going to buy from here, my stop loss will be below this last high if I'm going to make any decision around here for a buy. So basically, that is what that means. All right, so let's move on. I think that example is good enough. We are going to move to number 2. And the number 2 thing here is, what is a take profit? Just like the way the English is. Take profit. A take profit is an order that automatically closes your trade when a set profit level is reached. Now, this is what some trader does. Some traders feel like they shouldn't set a stop loss, take profit. Oh, what if the price goes above there and keeps going? Well, it might happen. But what if the price reverses before it gets to that place? and it never even comes back there in a long time, right? What do you want to do? That is why when we are entering into a trade, the risk to reward ratio is not only to protect your account, it is also to secure some profit. Because that way, I already say I am risking $10 to make 30. Ratio 1 to reward 3, right? When I get $30, I should not let my village people affect me by making me get greedy. If I can get 30, let's go to 50, let's go to 100, let's go to 1,000. Bro, that one trade is not what is going to break all your generational curses, right? So get your money when the market plays out for you on these scenarios. It is a blessing and you want to take it and be grateful, right? So purpose to secure profit before the market reverses. How it works: if you enter a sell, that is, you want to follow the market price down, you are selling, and price drops to your take profits. It goes like this. When you are selling, your stop loss is above, your take profit is down, right? So when the market drops here, immediately it gets there and your MT5 shows $30. It closes and take your profit for you. End of trade, right? Which is a very good tool, because if you are not sitting in front of your PC all day monitoring and all, you're at work doing some other things, living your life, this works for you by taking your profit and the stop loss by protecting your losses as well. Simple as that. I think that is all under that note. Okay, I have some example. So, example, you sell British pounds against the dollar at this price. You set a TP at this price. It's sell, so the figure will be lesser on our target if you are selling, right? That's 50 pips from this original place. If the price drops here, the trade closes, securing your profit. And of course, by now that the number of money you will make from these pips will be because of the lot size that you used. And remember that the money that you will lose if you hit your stop loss is based on the lot size that you used, basically. So where to place take profit? Near key support for sales or resistance for buys. So when I'm buying, right, for buying, there is a resistance like this, a support, and above the price there is a resistance. So if I'm buying to this place, right, my stop loss will be below, right? And if I'm selling, my take profit will be below. I hope I didn't mix that up. Let me recap on that. So when I'm buying I'm in the market for buys, right? My take profit is above, my stop loss is below. And when I'm selling, my stop loss is above, my take profit is below. That is how it is. So using a risk to reward ratio at least 1 to 2 or better. So once I'm risking $10. Once the market gives you like $20, you are good. Then as we go on, it's what we call partial profit, taking partial profit. Let me quickly explain that. So let's say I enter a position with a lot size that is divisible, meaning a lot size that can be reduced to a lower one. The lowest is 0.01. 0.01. Yes, that's the lowest in forex trading. Above that is 0.02, 0.03, 0.04, 5, 6, 7, 8, 0.09. Then we have 0.10, 0.12, 0.13 to 0.19. Then we go to 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8, 0.9. Then 1.0, 1.0, 1.01, 1.0.02. You get the progression. So anyone that is above that 0.01, I could take what we call partial profit, which I implement in my trading. So if I'm in a trade and I was on a 1 to 2 or 1 to 3 risk ratio reward, and my entry lot, what I'm risking on that trade is like, let's say I'm risking $50, and I enter a trade, and that trade had given me $100 profit. That's giving me risk of, instead of losing 50, I've made 100. I might not take the full profit. because probably I feel like the market might go further as a pro trader now. So what I do is to take partial profit. So let's say I enter with this 1.0, I was risking $50, and it has given me how much? It has given me 100. I could close 50 and keep $50, right? And leave the other half of the lot running. So I can close 0.5 lots. It's going to remain 0.5 lots because 0.5 plus 0.5 gives you 1. So partial profit. We'll talk more on that as time goes on. So number 3 is stop loss and take profit strategy. A good strategy involves setting stop loss and TP levels at number 1. That number 1 protects capital, meaning on our percentage basis that we thought about. There's no point risking the whole $1,000 just to make how much, because it's hard for me to get a position that will give me the same 1,000 back, and I'm risking everything. Why? So I could risk just some. So the way of protecting my capital is using the stop loss and take profit. Allow room for market movement. Some traders set stop loss too tight. They want to make $100, but they are risking $5. Ha ha ha. Washi Sadiq. Right? It don't work like that. You have to let the market breathe. And how do you do that? Remember, our market is in structure. Let me draw something out on that part. Remember where my two were. Remember that my market look like this. Uptrend, right? And on a downtrend, market will show a sign of sun like this. In between, there will be other structures. But let's say I want to trade, I want to buy now from this uptrend. My stop loss ideally should be at the last, my stop loss should be at the last low. Here, below this place. This is where my stop loss should be. If I put my stop loss anywhere in between, all the quite risky. The market might just take your stop loss and still go the way that you want it to go. So there is also a strategy of putting those stop loss and take profit. That's it. All right. Maintain a healthy risk to reward ratio. It is very important. I learned this the hard way, guys. The very hard way. But I mean, I will be just don't let me lose money. Don't let me lose money. I might be in minus $30, and when the market comes and give me $10, it has given me 10. Let me take it. When do I want to make profit? So I had to sit down and start maintaining a healthy risk to ratio reward. Because most times I've seen trades that I closed at $10 and went all the way to $90. That's it. So example of a 1 to 2 risk ratio reward strategy again is your risk. You risk 50 pips, stop loss, then your take profit should be 100 pips. Winning 4 out of 10 trades with this method will still keep you profitable. Even if you lose 6 times, you just need 4 wins and you are good. I did that explanation in the last lesson. Number 4, common mistakes with stop loss and take profit. I'm going to enter some of this. Like number 1, setting stop loss too tight. Setting your stop loss too tight. Price it quickly before moving in your favor. Epic pain, bro. Not using stop loss at all. Man, I did this for like 2 years. At least it can blow your account because you are not already agreeing to what you want to lose in the market. The number 1 thing is to admit your loss. Once you press that buy or sell button in your mind, I'm a positive thinker. I think positively every time. But when it comes to forex trading, bro, once you hit that buy or sell button, that amount that you say you are risky, maybe it's $100. In your mind, you have lost that $100, bro. That is how to deal with the pain in this industry, right? So always use a stop loss. Moving stop loss too early can get stopped out before trade plays out. There is what we call, when we get to trade management, we'll talk about that. It could be on a live session. But when you're in a trade and let's say you are buying and has moved from your price that gone up, we can move that stop loss from negative to a little bit of positive to protect our account. But most times when you do that without learning the skill perfectly, it can also lead to pain. Then lastly, setting unrealistic TP. Haha, man, I've done this one a lot of times. So you put your risk to ratio reward like 1 to 27. Fine, people do 1 to 27, but bro, what are you looking for? As a beginner, you are just setting out, you're just trying to secure some profit, grow your account so that you're attractive to investors and all that. You are not looking for 1 to 27, bro. You are looking for 1 to 2, 1 to 3 risk ratio reward. But when you see the market like, oh man, I want to catch all of this, bro, you have not transitioned into that yet. Get some of your money out. That's all that matters. And number 5, key takeaway. Always use a stop loss to protect your account. Never forget, account protection is very important. Secondly, place take profit at realistic levels to secure gains. Number 3, maintain a 1 to 2 ratio or better risk to ratio reward. As you practice more and more, you'll be able to fine tune your skill into using this perfectly. Then avoid common mistakes like setting stop loss too tight or TP too far. Trust me, there are such things as a too far TP and a too tight stop loss. So what I want you to do after this video is you already opened an demo account, right? As the new week on your MT5, the way I showed you, buy or sell your demo and set stop loss and take profit. When we go through our life lesson the next time, I'm going to talk about back test. Please note that down, that we're going to talk about back test. And then you'll be able to know how to do this on past historical data on the market and see how it plays out. With all that being said, we are done for today's lesson, and I'll see you in the next one. Cheers.